In this portion of the presentation, I'm going to tell you about each of the 7 Intercontinental Hotel Group properties, which include Intercontinental Hotels and Resorts, Crowne Plaza, Holiday Inn Express, which is also known as Express by Holiday Inn, Hotel Indigo, Staybridge Suites, and Candlewood Suites. I'll start by talking about the Intercontinental Hotels and Resorts. These hotels are the flagship of the Intercontinental Hotel Group. It was designed to cater to international business travelers and upper upscale segment of the hotel industry. It boasts prestigious addresses that include Sydney Harbour, Dubai, London Park Lane, Mayfair, and Paris. There are around 150 hotels in major cities and in over 60 countries under this brand. Crowne Plaza is an upscale brand that has over 300 hotels in major urban centers, gateway cities, and resort destinations around the world. It caters to predominantly business travelers, but has facilities that target leisure travelers as well. Holiday Inn is the powerhouse of the group, with around 1,400 hotels globally and one of the world's most recognized hotel brands. It is a mid-scale brand that targets a mix of domestic business and leisure travelers. Holiday Inn Express, known as Express by Holiday Inn in the rest of the world, is a predominantly U.S. brand, with around 1,700 hotels in the U.S., Canada, and Mexico, and 2,000 globally. It is similar to the Holiday Inn brand in amenities and pricing, but offers slightly fewer amenities and services. Hotel Indigo is an upscale boutique hotel brand that has the least amount of hotels in the Intercontinental Hotel Group. Most of the properties are found within the United States. It offers the personality and high design common to boutique hotels, but within a multi-hotel brand. This is an unusual combination in the boutique segment. Staybridge Suites is an upscale brand of all-suite and extended stay hotels. There are less than 150 Staybridge Suites in the Americas as the end of the first quarter, and a few in the pipeline of Europe, the Middle East, and Africa. Candlewood Suites is a mid-scale chain of extended stay hotels. It consists of suites and studios. It has around 150 locations, but only across North America. This slide shows us the number of hotels and hotel rooms by branding. Altogether, Hotel Indigo is the smallest in properties and rooms. Intercontinental Hotels and Resorts comes in 6th in regards to number of properties, but comes in 4th for the number of hotel rooms. Staybridge is reported to have 189 properties, but comes in 6th to number of rooms. Candlewood Suites recently reported to have 299 properties and 28,675 rooms. Crowne Plaza has 392 properties, the most rooms and properties before the Holiday Inn brands come into play. Holiday Inn may not get first in properties, but holds first for number of rooms at 231,448. Holiday Inn Express has more properties but less rooms at only 205,631. In this next segment, we're going to talk about IHG's finances and hear from Tom Singer, IHG's CFO.
Hello, I'm Tom Singer, Chief Financial Officer at IHG, and I'm here to take you through IHG's preliminary results for 2012. I'm pleased to say that IHG saw another strong year of solid growth in 2012. We increased revenue by 4% to more than 1.8 billion and grew our operating profit by 10% to 614 million. IHG's preferred brands helped to drive global RevPAR, that's revenue per available room, up 5.2%. The Americas saw a 6.1% RevPAR increase, and our business in the US is outperforming the industry. In Europe, despite challenging economic conditions, RevPAR was up 1.7%. And across our Asia, Middle East and Africa region, RevPAR was up 4.9%, with strong trading in Southeast Asia and Japan. In Greater China, RevPAR grew 5.4%, with rate up more than 3%. We opened 34,000 rooms around the world in 2012, growing our system size by 2.7% to more than 676,000 rooms. This was fueled by our expansion in developing markets, and when combined with our growth in RevPAR, resulted in us growing our fee revenue by an impressive 7%. We also signed 54,000 rooms, or 356 hotels, and this equates to nearly 1 hotel a day into our pipeline. Our high-quality pipeline of 169,000 rooms now represents a 12% share of the global hotel pipeline. During the year, we added to our portfolio of preferred brands with the launch of Hualux Hotels and Resorts and Even Hotels. We've signed 15 Hualux properties to date, as well as our first ever Even Hotel, a flagship property in New York City. Holiday Inn, which celebrated its 60th anniversary in 2012, continues to outperform. The Holiday Inn brand family accounted for around 70% of hotel openings and signings in the Americas. Our Crowne Plaza repositioning program is progressing well, and Hotel Indigo reached a milestone of 50 hotels open. With these strong results, I'm happy to report that for the third consecutive year, shareholders will receive double-digit dividend growth of 16% to 64 cents. And this adds to the $1 billion in capital returns that we've announced in August and takes the total cash we've returned to shareholders since 2003 to nearly $9 billion, reflecting the success of our asset-light strategy and our ability to deliver sustained high-quality growth. Looking ahead to 2013, which marks IHG's 10th year as an independent company, we expect the economic environment to remain challenging. However, our proven strategy and resilient business model positions us to deliver a further strong performance.
This slide shows IHG's geographic distribution of profit in rooms. Looking at the pie chart on the left, we see that 63% of IHG's operating profit comes from the Americas, 15% of their profit comes from Europe, and 22% coming from equal parts of Greater China market, and the other half coming from Asia, Middle Eastern, and African regions. Moving to the middle pie chart, we see that 67% of the rooms are located in Americas, 15% in Europe, 9% in Greater China, and the remaining 9% in Asia, Middle East, and Africa. The last chart shows that 43% of the pipeline rooms come from America, 30% from Greater China, 18% from Asia, Middle East, and Africa, and 9% coming from Europe. As we saw from the previous slide, the Americas represent approximately 65% of operating profit. The Americas also account for 190,000 employees and over 426,000 rooms for IHG. Europe, the Middle East, and Africa account for another 25% of the operating profit. These regions employ around 75,000 people and supply the region with approximately 117,000 rooms. Asia Pacific represents 10% of IHG's continuing operating profit. This region employs 65,000 people, and IHG provides 77,000 rooms in this region. This graph represents revenue since 2009 to 2012 for IHG. You can see from the line graph that revenues have steadily increased from $1.54 billion in 2009 to $1.835 billion in 2012. This graph shows some of IHG's competitors. It compares their market values in the past 5 years. The pink line, which has increased its market value the most in 5 years, is IHG. They've increased by approximately 81%. Next is Marriott, which is represented by the red line. They've increased their market value by 24.9%. The next is Starwood, which increased by 20.5%, followed by the Wynn and Las Vegas Sands Corporation.